Good morning, trading world. It is October 20th, 2022, 8:28 a.m. on the East Coast, and this is my pre-market outlook and technical analysis for trading the markets. Did the bond market hit its lows and why it matters? We all see the Fed is raising rates to fight inflation. Many refuse to believe that this will continue until something breaks, even though the Fed has said this in so many words. The bond market has been on the shelf for so long due to the Fed manipulation. People forget how big a deal the bond markets are. The bond market has been in free fall for some time now, since going back here to early August. You can see we haven't had a real bid up in bonds in over a month or two. But with the Fed continuing to raise rates to fight inflation, but no one really knows at what rate the Fed is headed towards, or at what point the Fed will say enough is enough. I am starting to think the bond traders will try to push us to this unknown point by sinking the bond market, which pushes up yields, which in turn raises rates. I explained this in a past pre-market, in which I said before that the bond traders would do what the Fed is too scared to do or just reluctant to do. And here we are again at a similar point. Will the bond traders say screw the Fed and continue to push rates higher to rip off the Band-Aid? Or wait for the Fed to slowly and painfully ease the Band-Aid off? The bond market itself appears to be so oversold, it just needed a break from all the selling. However, looking at this, we do have a bullish divergence building. If we take a look here at this low and here at this low, we pretty much cycled on the bonds as far as the daily chart. And what you're looking at now is a lower low with not a lower low on the indicator, which is a bullish divergence, telling us that we're going to get a pop or rally up to some point of resistance, probably as much as this 127 area, or we would probably need to go to a different time frame to actually find that resistance. But while I pay attention to this, at another time frame, we may be looking at a resistance more so around the 122 to the 123 area of short term. So, in my opinion, this will possibly lead to more sell side activity in the bonds soon, and will affect the market negatively as well. Looking for these effects to start to take effect after the 25th or 26th. So we do have maybe a week of pop in the bonds, giving us a break to where we can see both bullish moves in bonds and possibly in the equity market, which is rare to have both of those occurring at the same time. Let's get to the key levels of the day. All right, here we are back with the key levels for today. Starting on the resistance side, which we've already conquered, the jack resistance at 368 to the 369 area pretty much. Moving on to the queen resistance area, which is going to be 370 to the 371 area, and then king resistance, which is going to be 372 all the way up to 376. On the support side, we have our jack support at 366 to the 365 area, queen support 364 to the 363 area, and then king support 362 to the 358 area. The main thesis for today is bearish, closing below the 368 half with a projected target low of between 368 and 360. The alternate thesis is bullish, closing above the 368 half with a projected target high of between 369 and 376. The current major channel we are in is 364 to the 379 area, and the major channel above is 379 to the 397 area. We have harmony between the technical and the technical side, which is bearish, and the quant side, which is bearish. Market strength and order flow may have evened out a bit to the point if we close down, we could likely see a big bullish move on Friday. Again, the weekly outlook is bullish, closing above the 357.63 with a possible retracement of 361. And the monthly outlook is bullish as well with a possible retracement of near 394. With that being said, let's take a look at the scenarios of the day. All right, our first and most probable scenario is going to be our expanded range day structure. We could have an initial pop up, find resistance, and chop back and forth, and possibly end the day mildly lower. So there's going to be big expansion first to the bull side on the range day, which means we're going to push that upward boundary further and further up before reversing and then chopping back and forth lower and then lower. All right, here we are with the second scenario, which is going to be our rounded reversal day type structure. We could get a continued push higher after the cash open, pushing towards that jack or queen resistance area, finding our midday chop around either that queen or king resistance before spending the same energy we use going up to go back down the second part of the day. Also, I like to make you aware of the vice versa alert on the rounded reversal day type structure, as we could possibly see as well a continued push lower through the cash open, bringing us back down and finding support around possibly the Jack or Queen support area, finding that midday chop there, and then the second half of the day pushing up with the same amount of energy that we came down with during the first part of the day. That is our vice versa alert. Our last scenario is going to be our trend day up, which would mean we would have to open or continue to stay up above the previous close and open gap up. Start with a fade back toward that previous close represented by the blue line. Then start our golden window, which is the primary uptrend for the morning, the best time to trade. Reach our midday chop around possibly the Queen or King resistance area. And a lot of the times with our trend day scenario, we usually see a head fake looking to continue that main trend the second part of the day. And then at some point, we get that fade back into the close. So those are the scenarios for the day. I'm going to be looking for kind of at some point a close down to kind of bring this back down to normal, maybe even more so overnight. And if we get that at some point overnight, it leads me to believe, especially if we continue to feed on the order flow and market strength that we have by kind of sticking to that lower side on the market strength, it leads me to believe we would have a bigger pop or bull rally on Friday. So that's what I'll be looking for. But again, I have to keep you in mind that crashes do happen from oversold lows to where people think we can't go any lower, and everybody's stacked on the other side of that trade bullishly. And all it takes is that one crack or sharp move to shake everyone and scare everyone up. And here we go. We get that more powerful, more explosive alternate thesis. So that is it for today. I like to end by reminding us that your most important job as a trader is to protect the capital that you already have. We do this by knowing and understanding risk that we have on in each position and managing that risk in accordance to our account size. With that, wishing you a positive trading day. Let's go out and make it a great one.